here's a question. What's better for a company? Delivering a great report card for the past, or maybe a more promising one for the future? That's really the core tension. Texas Instruments, ticker TXN, just forced on everyone. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. We're kicking off a deep dive using our research captured this morning, October 22nd, 2025, and we're going to try and dissect this massive conflict from TXN's recent earnings.
Yeah, and we're diving in on a day where the market seems to be, well, just sitting on its hands. The macro picture's pretty indecisive right now. Pre-market futures are basically flat. You got the S&P up a tiny bit, NASDAQ down a fraction, Dow.
It's waiting.
Exactly, waiting for those Fed speeches later today. So for TXN, it's kind of a neutral, okay, show me the proof environment.
All right, let's unpack this TXN conflict then. It feels like the classic ace the final exam, but then tell the teacher you're skipping next semester situation. I mean, the good news first, they did beat Q3 expectations, brought in $4.74 billion in revenue.
Right. And they even threw in a 4% dividend boost. Can't argue with that part. But then came the forecast, and that's where everything shifted. They dropped, frankly, a bombshell. A much softer, weaker than expected outlook for the fourth quarter.
So that good Q3 news just evaporated.
Pretty much instantly. Like you said, you aced the test, but if you're not showing up next semester, that grade doesn't matter nearly as much. The future guidance overshadowed everything.
And this weak guidance really hits hard because of the valuation, doesn't it? That's the crux of the issue here.
Oh, massively. We've been watching this one. Our analysis showed the stock trading up near $181 before the news was significantly overvalued.
Why so overvalued?
Well, look, TXN's in a tough spot. Highly competitive, very cyclical part of the analog chip market. Our fair price estimates, based on cash flow, we had it way down below $50.
Wow.
Even being generous with earnings projections, maybe $140 felt more realistic. So that $181 price was, built on hope. This weak guidance just confirms that the premium price tag was kind of built on sand.
What's wild, though, is the sentiment before this news. If the valuation was stretched, why was everyone so optimistic?
That's the disconnect, isn't it? The options market was leaning bullish.
Yeah.
You saw that put-to-call ratio at 0.8. That's surprisingly optimistic.
Yeah, very low. And short interest?
Tiny. Only about 2.26% of the float. So institutions weren't scared. The crowd was definitely betting on momentum carrying it higher, basically ignoring those fundamental red flags.
Until the guidance hit.
Yeah.
Then the technical picture just shattered.
Completely. You had this budding bullish setup, right? Money flow looked okay. Momentum indicators were pointing up like it was coiling for a move higher.
Well, spring's eternal.
And then bam, yeah, guidance comes out. The stock closed at $180.84, and after hours, it plunged straight down to around $165.
Ouch.
Yeah, it just completely invalidated that short-term hope and really reasserted the longer-term bearish trend that the fundamentals were already screaming about. Weak forward guidance. It's probably the most powerful negative catalyst there is.
So looking at our research, the tactical outlook now is clearly bearish. Decisively so.
And the key battleground now for the bears to stay in control is holding the price below that 170 to 175 zone. That old support.
Exactly. That zone was a big option support wall. Now, you'd expect it to act as major resistance if the bears can hold the line there.
Then the target becomes that after-hours low, around $164.
Exactly. The immediate downside target test. At $164, it really puts things in perspective. The past quarter, Q3, that was the party for Texas Instruments.
Yeah.
But the forecast for Q4, that's calling for some serious clouds ahead. It's just a stark reminder, isn't it? In the market, it's not about where you've been. It's all about where you're likely going. And maybe the bigger question for you listening isn't just about TXN hitting $164. It's whether this is the canary in the coal mine. Does this signal a broader slowdown for analog chips? If TXN's hitting turbulence, which other big chip names might start to feel the squeeze soon, something to think about. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.